How's it going, everyone? Brian Hoops here with Midwest Market Solutions. This is the closing market report. This is our closing commentary for February 18th, 2014. We're going to try and do these updates once a month or every couple weeks or when things transpire that we can talk about. So I'd like to keep you up to date on what's going on in the markets so we can help you out with marketing and trading, give you some ideas. But we want you to remember everything that you hear here on Midwest Market Solutions account is copyright of our company 2014. We also want to mention there is a risk of loss in trading futures and or options is substantial, and each investor and trader must consider whether this is a suitable investment for themselves. Past performance, whether actual or indicated by simulated historical tests of strategies, is not indicative of future results. Trading advice is based on information taken from trades and services and other sources that our company believes are reliable. We do not guarantee that such information is accurate or complete. It should not be relied upon as such. Trading advice reflects our good faith judgment at a specific time and is subject to change without notice. There's no guarantee that the advice we give will result in profitable trades. Alright, so we've got our commentary out of the way. Let's talk about some markets here today, and what we're going to talk about is trend of the markets. You've heard the saying probably, trend is your friend, and we want to look at different ways to identify the trend. And speaking from personal experience, when you're trading, especially speculative type trading, trading with the trend is probably the number one most important thing in making money. The trades that we've recommended that have been winning trades, the majority have been with the trend, and the majority of the losers have been against the trend. So we've sometimes bucked our own mentality, just to do dumb things when you trade sometimes and look back in hindsight and say this was really a bad idea. And most of those times it has to come with dealing with going against the trend. So we're going to look at different ways to identify the trend, talk about how and why it's important, and we're going to start here with the sugar market as one that recently has been in some nice trending patterns. A couple different ways to identify the trend. If you notice the blue line going through here, this is a moving average. This is a 50-day moving average. And a moving average is simply the average closing price. You can change your settings on most software packages to say opening, closing, but it's the average of a close over the last 50 days, and that gives you one price point. So you can see this line floats down when the market's moving down. When it's moving up, it should move higher because the average price is moving higher. It's kind of a slow trending market here. Now, the gold line, yellow line that we have, is a 21-day moving average. Now, a lot of funds will pay attention to both those moving averages, and we'll watch this as a trend pattern. It's quite a bit shorter than 50 days, but if you notice, there's normally about 20 or 21 days in a month, trading days in a month, I should say, and that's why some of the traders will prefer to use a 21-day average. So you notice it follows the market up as well, and when the market turns back down, it also turns lower. Now, some people will also use a combination of both of these. Now, notice at times these markets will cross. Let's pull this down a little bit. Here we have the blue 50-day moving average above the 21. That means prices are in the downtrend. And you can see they are apart until they come together right in this area. This will be late August, early September in sugar. And then the gold line, the 21-day average, moves above the 21. Here would be an indication that a downtrending market, here a congestion pattern when the lines are virtually together, and as they spread apart, it's an indication of an uptrending market once again until you get into this point here where they cross on about November 19th. Trend would be lower at that point until we get into this time frame. Now, we chose sugar to talk about tonight because of what's going on in the market here. We've had easy to tell it's an uptrend line here. The spread is between the moving averages shows the 21 higher than the 50. The market is above the 21, above the 50. So all those are indications of an uptrending market here. All indications are a downtrending market. Now we're starting to see the market showing some signs of trying to move above the not only the 50-day or the 21-day, which is right in this area here, Now we're also above the 50-day, another indication, especially to funds, that we're in a trend-changing market. And if you wanted a third confirmation, you'd look for these moving averages to come together and cross. That has not happened yet. Another way to look at the trend of the market is called a Will trend. This is a Larry Williams formula that he developed, and we use it on our Trade Navigator platform. Basically, this purple line represents the Will trend, and I think it's very invaluable for determining the trend of the market. Here you would be in a downtrend because you're below the Will trend line, and prices move above it here in September 9th, coinciding with the move above the 50 and the 21-day, and we trade higher until you get below the 21-day right in this area. So actually with sugar, the 21-day and the Will trend are about the same as far as determining the trend of the market. You look back here, basically the same thing. Prices never get above the Will trend or the 21-day. They got 1 day in this area above it, but here back in the early part of this month, September 2nd or 3rd, this is a market that showed some signs, 2 indications there to show a sign of a trend change. So when we look at doing trends, ideas of what to trade on, we always look to have maybe 2 or 3 things in our favor. The more in your favor, the better. Not to say that everything will be perfect if you have 2 or 3 things in your favor, but it certainly increases your odds of that. We looked at the sugar market here because potential trend change is going on. You don't see that here in late January, but here in the month of February, the potential trend change. We are looking for ways to buy sugar in this area. Some setup patterns develop. We're going to look to buy sugar. Sugar looks like it maybe broke out today to the upside. If we get some pullback into congestion, we'll be buyers. Now let's look at some charts where we've actually recommended to go long based off of this similar thing that we're seeing in the sugar market. We're going to look at coffee. Okay, pretty much a downtrending market since May of last year. Downtrend. Everything that we see here, downtrend, the 50-day above the 21-day, until we get into this area in here. Now we're starting to break above the Will trend, and as the Will trend prices are above it, it looks like we're in an uptrending market. We're still right in that range of the 21-day, so signs are developing here in December that things are changing. Now we're starting to get above the 50-day, the 21-day. We're up in the Will trend, so we would say we're in an uptrending market. That's why you'd want to take pullbacks into support. Here we pulled back into the Will trend and the 21-day, 50-day moving average range, a buying area. Here is where we recommended to go long. We had a market nice little pullback down into support. Right here was a congestion pattern. We went long, and what we did was use our target shooter as a recommendation. Pretty basic setup market here. Hit our target and then moved higher. And then what the market did after this is another congestion. Boom, took off and rallied huge amount today. A big move in the coffee. So obviously the trend's going in higher. One thing that we don't have on the chart here that you want to mention, is as the market is a downtrending market, funds most likely are selling, and as the market changes trend, these funds buy back their shorts and actually help push the market even higher than what you expect. So that's what's going on in coffee. We just got out of a gold trade. Let's look at what's going on in gold. Here we were in a downtrend market, November, December. These are where you'd want to be taking sell signals. Here would be one sell signal, congestion pattern here, rally into some resistance, congestion pattern, another sell signal, rally, congestion pattern. If you sold it, you might have got stopped out at a loss. That's an indication that trend is changing. We're above, right in this area, we're moving back above the Will trend, above the 21, flirting with this 50-day. Here's a buy point, here's a buy point, and look at the gold market has really taken off and rallied. We were buyers in this area for our spec recommendations, and had some nice profits. We can use a dollar difference on this to talk about where we got out. Right now this is about a $7,000 move if you would have bought in this area and hold on to it today. So it's a pretty substantial move on some short covering. Let's choose a couple more markets here and we'll sign off for the night. If we look at March beans, boy, it's tough to tell which trend we're in. Here you got a lot of lines, you got crossing, you got more crossing, you got a lot of things going on, but right in this area was an indication that we're above this will trend. We're flirting with the 21 day, and the prices took off and rallied. We've seen the same thing in here. It's hard to pick these bottoms, so don't try. But once we start to break the trend, that's when to get into the market. Corn, we look at all these rules we just talked about. What's the trend of the market? Well, ever since last September, August, September, downtrend, downtrend, downtrend. No indications of anything above any uptrend, except after the January crop report, which was right here. Rally, pull back, flirt with these trends. The will trend says we're higher. The moving averages are starting to cross. Notice how they crossed here on the 7th of February. This is May corn chart, by the way. We're above the moving averages. Everything right here says we're in an uptrend in corn at this time. So keep that in mind when you're talking about trades. Wheat, let's look at May wheat because that's the wheat contract now. May wheat, we are just in the process of starting to change the trend in here. Notice the moving averages haven't crossed. We're above the 50-day finally, first day today. We're above the 21, above the will trend, so there's some indications right in here we're changing directions or changing trend of the market. Very likely we'll get some sort of a pullback. See, here we notice we rallied and pulled back for a couple days. If we get a pullback, that's going to be another market we're going to look to buy into is the wheat. So pull up cattle. Notice how we're in an uptrend based off of all these indications we talked about here. The moving averages crossed right in this area, December 24th time frame, and ever since then funds have been big buyers pushing this market higher. So here's a pullback to buy into. Any pullbacks we get, we want to look to be buyers until we get some sort of indication of change of trend. So irregardless of what you may feel as fundamentals, trend is most important. Market's always going to be right in the end. All right, we'll sign off here. Hope you've enjoyed this commentary. Have a great evening, and good luck and good trading. This has been Brian Hoops from Midwest Markets.